Heya Cryptozens, tonight's show. The EU Adopts MiCA. It's 10 p.m. Pacific time. The date is July 1st, 2022. Welcome back to the Crypto Overnighter. My name is Nicodemus, and I'll be your host. The cover model, mascot, and co-host for this podcast is Tex, and together we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. So take a minute, go ahead and subscribe to the podcast now, because we're here at 10 p.m. every night so that when you leave in the morning, you're taking with you the crypto news analysis that you need to start your day. And keep in mind, nothing in this show should ever be considered financial advice. Yesterday, late Thursday, the European Union took a huge step. And I say this because it was yesterday that the first major economy has put forth and adopted a comprehensive framework, a regulatory scheme to manage crypto assets. Yesterday, the EU adopted the Markets in Crypto Assets legislation. They struck a deal on this landmark legislation to regulate crypto assets and service providers throughout the Union's 27 member states. Stefan Berger is a German lawmaker. He led a lot of the negotiations on MiCA, and he said, quote, "Today we put order in the wild west of crypto assets and set clear rules for an harmonized market. The recent fall in the value of digital currencies shows us how highly risky and speculative they are, and that it is fundamental to act. And these new rules are due to go into effect by the end of 2023. Now, they've been working on this for nearly 2 years, haggling back and forth. And a lot of folks are upset by this because life got just that much harder for crypto issuers and service providers. That said, I think it's widely accepted that there must be some sort of regulatory framework to protect folks. Uncertainty can cause institutional investors to be concerned. Look at the mess we're in now with the Three Arrows Capital, Celsius, Terra Luna, USD mess. Institutional investors aren't going to want to put money into that. It would be irresponsible for them to do so. If you want to degen into something with your own money, that's fine. Nobody cares, except maybe your spouse and your bookie. But if you're investing for others, you're supposed to be quite a bit more careful than you are with your own money. So what does this mean? If you are a crypto issuer, then you've got some homework to be done. Because as it stands, if you are a crypto issuer, and in this case they mean exchanges, then you need to publish a white paper. That's their term. It's a technical treatise explaining any tokens that don't have a clear issuer. Bitcoin, for example, has no single issuer in control of it all. So the exchanges will have to publish their own research on any tokens that fall in that category. And those exchanges will be responsible for any misleading information. And you know where this is coming from, right? All those sketchy ICOs, a bunch of initial coin offerings that were just bogus. Also, crypto asset service providers, and that's a term that they use, will need to put out warnings. And these are warnings for consumers because crypto trading is a risky business. They want to make sure that consumers get it. And they also are establishing rules on marketing communications. In addition, all companies that issue digital tokens are going to need a license to serve folks living in the EU. They're also expecting to crack down on insider trading and market manipulation. A statement from the European Council said, quote, "MiCA will also cover any type of market abuse relating to any type of transaction or service, notably for market manipulation and insider dealing." At the time of writing, the global crypto market cap is $873 billion. It's up 1.96% in 24. The top 5 cryptos by market cap are Bitcoin up 2.88%, Ethereum up 3.87%, Tether, USDC, and Binance Coin up 1.88%. Stablecoins are also a subject of interest under MiCA, which surprises no one. They looked at what happened at the Terra Luna Black Swan event, and then they said, we can't have that. What happened? Well, algorithmic stablecoins didn't prove to be very stable. And during a market downturn, when people needed to be able to count on stablecoins holding their value the most, those stablecoins failed. Not all of them, of course. just the algorithmic stablecoins, the ones with no liquid reserves but expected to swap a stablecoin and a volume coin back and forth to maintain balance. So this new legislation requires issuers to build up a large liquid reserve to meet demands. Ernest Urtasun is a member of the European Parliament. He launched a Twitter thread on the subject. He said that the reserves would have to be, quote, legally and operationally segregated and insulated, and that they also must be, quote, fully protected in case of insolvency. And this is where we run into a problem, because MiCA does something that I think is unworkable and unreasonable. Urtasun said in his Twitter thread that they're putting a cap on stablecoin transactions. What they're saying is, if this is used as a means of payment, which stablecoins are intended to be, there's a cap. And that cap is 200 million euro in transactions per day. I don't see how that could possibly work. As we like to do on this show, let's take a look at the numbers. Right now, 1 euro is trading at $1.04. So let's just call it a 1-to-1 ratio for the sake of discussion. At the time of writing, according to CoinMarketCap, Tether currently has a 24-hour trading volume of $50 billion. So that means they're out, right? Because that is far in excess of 200 million euro. Circle isn't as big, but they've got the same problem. Because at 5 billion for 24-hour trading volume, they'd be out. Binance USD is sitting at about 5 million. Maybe Circle got ahead of the game, though, because MiCA passed on the same day that Circle's euro-backed stablecoin launched. CoinMarketCap doesn't have any information on this coin yet, so I couldn't say. But hey, if let's say they're only making 200 million euro C, then they're good, right? And the regulators are going to like them. Circle is promising a full reserve model, just like USDC. And that's going to be harder for decentralized coins like DAI. And I mean, who's going to be watching them? And so we've got consumer protections. We've got some rules around stablecoins. Now we need some enforcement. Enter the new sheriff, ESMA. That's how I'm pronouncing it. I don't know if that's the legit pronunciation or not, but ESMA in this case stands for European Securities and Markets Authority. Now, when I say there's a new sheriff, I don't mean ESMA is new. It's not. ESMA is an independent securities market regulator. They've been doing their best SEC impersonation since 2011. And ESMA will be monitoring, especially the largest crypto asset service providers. The global NFT market cap is up over $12 billion. Sales volume is down 1.2% in 24 hours. According to CoinMarketCap, the top 5 NFT collections by sales volume are Bored Apes, followed by Moonbirds, Otherdeed, Mutant Apes, and CryptoPunks. Now keep in mind, some of these collections have very volatile prices, so do your own research. Now, if y'all remember, there were a few concerns about this new regulatory framework. Proof of work, remember that? They were going to just flat out ban proof of work entirely. Instead, MiCA is addressing some environmental concerns. They're forcing mining firms to disclose their energy usage as well as the impact that digital assets are having on the environment. Member of European Parliament Chris McManus said, quote, MiCA also compels companies trading in crypto assets to disclose the environmental impact of the processes behind the creation of that crypto asset. As we know, some of these use very environmentally wasteful processes. So he's not happy. He wanted things to go further and ban crypto mining. But that was too divisive. So as we reported here, back in March, that was taken out of the directive. Also, they're not touching NFTs this time around. Ireland, Lithuania, and Hungary had voiced opposition to including NFTs in the MiCA framework. That said, the European Commission has 18 months to conduct a thorough assessment and determine if the time is right to start regulating NFTs as well. Because toward that end there, they'd been talking about forcing NFT exchanges into this framework. So they would force OpenSea and Rarible to get an EU license to sell to customers in Europe. So NFTs presently are safe from regulators for now. That is, unless they can be split up, if they can be fractionalized amongst other people, then they may fall under MiCA rules. And for a while, they had talked about putting in unhosted wallet regulations in MiCA. Instead, on Wednesday, they finalized a deal on anti-money laundering regulations for crypto transfers. Fortunately, that did exclude laundering checks on all payments to unhosted wallets. And this part certainly feels like a compromise, because customer identity needs to be verified before even the smallest of crypto transfers could happen. Only between two regulated wallets. Unhosted private wallets, for the most part, they would be left out. That is, unless the value exceeds 1,000 euros, which that 1,000 euros, that puts it on the same level as the traditional banking sector. Socialist lawmaker Paul Tang wasn't happy with this development. He had been pushing for tougher AML measures. He said the deal meant, quote, "The verification of unhosted wallets is deeply ingrained in the EU's fight against money laundering through crypto. We cannot just focus on the regulated sector while keeping the backdoor open to large anonymous crypto flows." Now, personally, I am of two minds about this whole MiCA regulatory framework. In a way, I'm glad it's finally happening. That said, this is going to be a painful experience. Things are guaranteed to be wrong in its first draft. Look at the stablecoin mess. How are you even going to promote a stablecoin that can only allow 200 million in transactions a day? How are you even going to get enough people interested in using that coin to make it worthwhile? But again, it's a step, and that's important right now, because as you can tell, they are serious about getting it right. They've been working on it for over 2 years, and I like that they left things out that they felt that they weren't ready to tackle just yet. So, it seems pretty clear that the intent of the rule set is to protect individuals and business investors, as well as pushing out the bad actors from the space. On the other hand, you have people like Seth Hartling. He is the global head of policy at Ledger. He's not a fan. In a Twitter thread, he said, quote, "This was Europe's chance to regain market share lost in Web 2, but did the EU seize the opportunity? TLDR, no. MiCA doubles down on the failed notion of leading in regulation rather than prioritizing innovation, but it could have been worse. And in the end, maybe that's the best thing we can hope for from all this. Progress that might not be as much or as good as we would like, but could definitely have been much worse." And we're going to call it there for tonight. I want to thank you, my listeners, because when you stop listening, I'll stop talking. You stay safe out there. Watch out for yourselves, but watch out for each other too. We'll see you tomorrow night.